day traders, and welcome to the premium video newsletter for July 29th, 2013. Starting with the fundamentals, we had the pending home sales report released before the opening bell today. The National Association of Realtors said its seasonally adjusted index for pending home sales ticked down 0.4% to 110.9 in June. The number was slightly below the expectations. The number of Americans who signed contracts to buy homes dipped in June from a 6-year high in May, a sign that completed sales could stabilize in the next month or two. The slight decline suggests higher mortgage rates may be starting to slow sales. Still, signed contracts are 10.9% higher than they were a year ago. Most of our subscribers know that I believe we are in the very beginning of a bull phase in the home building sector. Interest rates are going to move substantially more within the next year as the economy begins picking up once again. The gold market is going to move down as well because the economy is moving in the right direction. When this occurs, one of the first sectors you want to look at is the home builder sector. In the past, I offered several individual companies, but many of our subscribers prefer ETFs because there's more predictability when you're trading multiple companies, less earnings surprises, and ETFs provide a good overall gauge of the market sector in general. One ETF you want to monitor is ticker symbol XHB. This is one of the original SPDR ETFs that replicates as closely as possible one of the 19 subsectors that make up the S&P 500. If you notice, the index has been very volatile during the last year. However, the trend is clearly moving upwards. This is a monthly chart, and the reason I'm using a monthly chart is because the monthly chart is a good indication of the fundamentals. You can see exactly how the economy has impacted this industry and how the sector is slowly beginning to move higher. I believe this ETF is just getting started, and I will continue monitoring it for pullbacks and setups to the upside. I do want to bring this up because many of our readers asked me what sectors I like for the long term, and I'm very bullish on this sector for the next few years. Looking at the stock market as a whole, the S&P was drifting for most of the day. Earnings are about halfway out and they're mixed, but volume remains low due to the summer season. I'm expecting to drift near these levels tomorrow as well, unless something unexpected happens. The transports had an inside day today and a 4x4 setup to the long side that was never triggered. The market is very mixed right now with very little direction as a whole. We are waiting for the Feds to speak later in the week. Until Wednesday, I'm not expecting too much volatility from the market. The price of oil remained flat Monday, ahead of information later this week on oil supplies, U.S. monetary policy, and economic growth. Traders are looking for clues Wednesday in an announcement by the Federal Reserve on whether and how long the Fed will scale back its stimuli plan. Traders are also looking to see whether Energy Department will report another draw in oil supplies after dropping by a surprisingly large 30 million barrel over the past month. Oil supplies remain high compared with the 5-year average, even after the month-long reduction. So many traders believe it's more likely that oil prices will soon fall than they will rise further. Analysts at Commerce Bank added that NYMEX contracts had developed a considerable potential for correction, which points to further price falling in the coming days. I tend to agree with this, but we have to look at it technically. While I was anticipating us hitting the 110 level, and we came about a point away about 1 week ago today, the market is clearly in a distribution phase right now. The trend is very strong in this market, and the pullbacks have been almost non-existent. I'm going to give this market a 50% correction before I throw in the towel on the bulls. The low for this swing was around the 92 area, and the high was around the 109 area. That's 17 points. One half of that is roughly $8.50. Subtracted from the 109 high leaves us at the 101 to the 100 level. I'll be watching this level carefully and will remain bullish unless we violate these levels in the coming days. I do think if this market is becoming bearish, once again, we should see a test of the highs or somewhere around the 107 area at least. Keep in mind that you can trade the USO ETF to trade this market if you don't trade commodities. The USO is actually really interesting. It averages the first 3 months of contract prices, so you really get an extremely accurate picture of the crude oil market with the USO ETF. I want to cover two currencies from a technical perspective. First, the euro currency, which is extremely correlated to the Swiss franc. So I'm actually talking about both of them right now. If you notice, we're having some resistance around this area, and as I mentioned last week, if the market continues going higher from these levels with significant momentum, we will more likely than not test the 1.34 level within the next week or so. If, however, we stagnate and begin to drift, then this may look like a slightly lopsided head and shoulders pattern. I believe the deciding factor will be the US economy. More specifically, I want to see if the weakness in the US dollar continues. If it does, and I believe it will for the next few sessions, we will most likely test the 134 area. The second currency I want to look at is the yen. We did continue the breakout to the upside as anticipated. The initial breakout was mostly short covering, but now buyers are beginning to pay attention to this market. For those who missed last week's analysis on the yen, I'm more concerned with the lower support line being violated right now. The upside will take care of itself, but you should see a continued slope moving higher. Otherwise, I wouldn't put too much faith into this market to the upside right now. There's a few setups for tomorrow's session. There's a great looking tail gap to the downside on ticker symbol INGR, and a tail gap to the upside on Boeing, ticker symbol BA. For the long setup, place a buy stop 10 cents above today's high, and if filled, place a sell stop 10 cents below today's low. For the short setup, just do the opposite by placing an entry sell stop 10 cents below today's low, and if filled, place a protective buy stop 10 cents above today's high price. That's it for today's tutorial. I will update you tomorrow after the opening as usual. Have a great night, everyone.